Gold is ancient, Bitcoin is aggressive, and billionaires? They're choosing sides, fast. Welcome to Scratch to Fortunes, where we decode how wealth is really built. Today we're diving into why the ultra-rich are shifting from gold to crypto. And it all starts with one simple yet powerful concept: scarcity. Imagine you have something that almost nobody else has. Because it's so rare, people are willing to pay a lot more for it. This is the basic idea behind why some things are so valuable. Think about it. If everyone had a diamond, it wouldn't be worth much. But because diamonds are hard to find, they become a symbol of wealth. It's the difference between a regular rock on the street and a rare gem in a jewelry store. Supply, demand. When the supply is low, the price goes way up. Billionaires understand this concept better than anyone. They don't just put their money into regular stocks or savings accounts that can lose value over time because of inflation. Inflation is that sneaky thing that makes your money worth less each year. To fight this, billionaires look for assets that are scarce, things that can't be created out of thin air. If you own something with a limited supply, its value tends to hold steady or even increase. Gold, Bitcoin, both are considered scarce but in very different ways. For thousands of years, gold has been the go-to asset for storing value. Shiny, rare, and you can't just make more whenever you want. It has a physical presence that people trust. We don't know exactly how much gold exists, but supply increases slowly and predictably, about 1.5% to 2% per year. This slow and steady increase is why it's considered a reliable store of value. When markets get shaky or currencies weaken, investors often flock to gold as a safe haven asset. It's like an insurance policy against economic disaster. However, gold isn't perfect. It's heavy, difficult to store and transport, and verifying authenticity can be a hassle. And while growth is slow, it's not fixed. New discoveries or cheaper mining could increase supply and impact price. These drawbacks have led some investors to look for an alternative. Now, let's turn our attention to the challenger, the digital disruptor, Bitcoin. Created back in 2009, Bitcoin introduced a completely new idea of scarcity. It's a digital currency not controlled by any single person, company, or government. It exists on a global network of computers called the blockchain. Satoshi Nakamoto programmed a hard limit into its code. There will only ever be 21 million Bitcoin in existence. With gold, supply increases slowly, but the total is unknown. With Bitcoin, the exact number is known: 21 million. New Bitcoins are created through mining, computers verifying transactions and earning rewards. Every 4 years, the reward gets cut in half in an event called the halving, making new supplies scarcer over time. This programmable scarcity is why many billionaires see Bitcoin as an inflation hedge, potentially even more powerful than gold. As demand increases, price can rise because supply cannot expand to meet it. Of course, Bitcoin has risks. It's newer and historically volatile. Regulatory uncertainty remains, and while the network is secure, users must protect their private keys. To grasp scarcity, think a first edition holographic Charizard. Its value comes entirely from rarity. Limited print, many lost, demand rising, low supply plus high demand drives massive price increases. Some call Bitcoin digital gold. You could even call it a digital Charizard. There will only ever be 21 million Bitcoin, like a limited print run. As more people learn, invest, hedge inflation, or transact online, demand grows. But no one can print more Bitcoin. Its supply is mathematically fixed, arguably the scarcest asset humanity has created. A billionaire buying Bitcoin is buying a verifiably scarce digital asset as the world goes increasingly digital. Just like collectibles, Bitcoin's future value depends on fixed supply and rising global demand. It's a bet on digital rarity in a world where most digital things can be copied infinitely. The debate over Bitcoin versus gold isn't theoretical, it's playing out among the world's wealthiest and most influential investors. On one side, the old guard swears by gold. On the other, tech visionaries are all in on Bitcoin. Critics argue Bitcoin lacks intrinsic value and is speculative. Champions like Michael Saylor call it a superior, scarce digital money. Pragmatists like Ray Dalio now take it seriously as a hedge. It highlights a generational and philosophical divide: history and tangibility versus innovation and mathematical certainty. Let's break down Bitcoin's advantages: portability, divisibility, and absolute scarcity. You can send $1 billion worth of Bitcoin across the world in minutes for a relatively small fee. Downsides: volatility, regulatory risk, and key management. Lose your keys, lose your Bitcoin. Gold's advantages: history and stability, tangibility with no counterparty risk, and global recognition. Limitations: storage and transport costs, verification hurdles, and a supply that can grow. Will every billionaire sell their gold tomorrow? No. The smart approach for many is to own both. But in a digital era, Bitcoin's portability, global accessibility, and mathematically guaranteed scarcity present a value proposition gold can't match. Gold will always be valuable, but for billionaires betting big on the future, Bitcoin is the new king. Enjoyed the video? Show some love, like, share, and subscribe for more smart money moves and billionaire insights. See you in the next one.